Welcome to Wake Up with Nubian Tigers Talk. This is the first episode of what we hope to be a long-running podcast. Nubian Tigers are a group of people who met at Princeton University and have continued to be friends throughout the decades. The COVID-19 pandemic and the civil demonstrations following the murders of Breonna Taylor and George Floyd by the police motivated us to harness our life experiences and professional expertise and contribute our voices to the broader discussion of the conditions of life throughout Black America. My name is Michelle Jacobs, and I'm with my co-host, Ray Smaltz. Before we get to today's guest, I'll turn it over to Ray.
Thanks so much, Michelle. And it's an honor to be sharing this inaugural podcast with you and our listening audience. The acronym WAKE, or WAKE, stands for Wisdom, Advice, Knowledge, and Engagement. And the UP is the abbreviation for Princeton University, only backwards. When the late John Lewis was only 23 years old, he delivered an inspiring speech at the historic March on Washington in 1963 and punctuated the end of it with, "Wake up, America, wake up, for we cannot stop and we will not and cannot be patient." This podcast aspires to wake up our listeners to some of the very same struggles within America and across the globe today. Michelle, back to you.
That's a great inspiration, Ray. For the past 4 months, we've all been dealing with the impact of the COVID-19 pandemic. It's painfully clear that Black and Latinx people have suffered disproportionately, both in deaths and rate of infection compared to their numbers in the population. But people may not be aware of the devastating impact COVID is having on Black home ownership. Our guest today is Pam Taylor, a broker manager with Baris Real Living in Livingston, New Jersey, and a member of the class of 1976. Thank you for joining us today, Pam.
Thank you very much for having me.
Let's start with the 2019 report from the Urban Institute, which indicated that Black home ownership was at its lowest level since 2000. Can you give us some insight into why this is happening and whether the 2008 financial collapse contributed to this dire statistic?
Well, first and foremost, there were extraordinary economic conditions that existed at that time. The market had crashed, many people lost their jobs, and all of the financial instruments related to mortgages were also in jeopardy. First and foremost, there were many risky loans out there. There were complicated mortgage schemes. Because of the crash of the market, there was a rapid increase in foreclosures. And as a result of all of that, there were also price decreases that occurred in housing. Now, from a historical point of view, Black homeowners have always had to overcome certain hurdles in the market. First and foremost was redlining. And typically what would happen is lenders would go out and identify sections of a particular area where they felt they had the riskiest loans. They would literally take a red pen, outline those areas, and typically the people who lived within those communities were Black people or people of color. So it made it difficult for Black families to even get loans. A second issue was deed restrictions. There were times when we simply could not buy a property because it said Black people couldn't buy that particular property. So we were restricted in that way. We overcame some of these things with some of the federal laws and state level laws that kicked in. We were subject to predatory lending. And predatory lending is defined as having unreasonable fees, crazy interest rates, payment requirements that were very challenging. Now, why were we subject to predatory lending? Basically, there was little lender competition in the areas in which we lived. Lenders did not exist. There were property owners that were sitting on quite a bit of equity. So you'd owned a home for a long period of time. You had a significant amount of equity in the home. Someone approached you and said, you know, you could borrow money against your home, and it looked very attractive. And buyers were just not properly informed about the risks related to these loans. Therefore, Black homeowners fell into what's called subprime loans, which are typically available to those who have poor credit. But the reality is that many Black homeowners with good credit were pushed into these same loans. And typically they could have gotten a loan elsewhere, but these were the lenders in the area. As of the first quarter of 2020, only 44% of Black people own their home versus 74% of white households. I'd like to add that white high school grads own more homes than Black college grads, and they're able to obtain more traditional mortgages.
Are there other factors besides the predatory loans that keep Black home ownership rates low?
Well, it's income, credit, things like job security. If we have, shall we say, sketchy job history where we have to go from job to job, typically when lenders are looking at your job history, they want consistent employment, let's say across a year's time. Naturally, we have other hurdles. Sometimes illnesses will destroy our credit, will push us into bankruptcies. If you're in a bankruptcy, there's just no way you're going to be able to get a mortgage for a home.
Okay, so now we have the COVID-19 pandemic. How has that impacted the ability of Black homeowners to either maintain their homes or to obtain homes?
Okay. Well, there was some quote unquote good news that came out that as of the second quarter of this year, 47% of Black people own their homes. And the all-time high was 49.7% in the second quarter of 2004. But the incredibly bad news today was that an additional 1.2 million people filed jobless claims. There are 55 million people on unemployment at the moment, and that represents a third of the workforce. And I can guarantee you that Black unemployment within that is incredibly high, and it's traditionally higher than it is for white people. So first and foremost, we're looking at a financial hardship. We've seen the end of the CARES Act and the additional $600 stipend. I personally don't even know how people are paying mortgages with that, so I don't think it's had that great of an effect upon it. 28% of Black homeowners did not pay or had not deferred their mortgage payments in May of 2020. So that is an indication of what's to come. If you were behind in May of 2020 and you had not reached out to do a deferment or to obtain forbearance, who knows what's going to be happening in the next couple of months. You have family members who lose their apartments, lose their homes, etc. You know, people are getting together more often than not. Black people are 2 times more likely to contract COVID-19. Okay, now you have this mixing and mingling of households, and you have an opportunity there to make a bad situation worse. So you have the financial part, and now you're increasing the risk of illness.
So Pamela, with all of the havoc that COVID-19 is creating on this economy, what will happen, or better yet, what do you think will happen when the state moratoriums end?
It's not good news, right? So if the foreclosure bans end at the end of August, August 31st, there are projections that at that point in time, 225,000 homes will be in some stage of foreclosure. And the worst case scenario is that there will be about 505,000 homes in foreclosure in that time. Now, if we look at what the definition of foreclosure is, it's not a one event. Basically, if you do not pay your mortgage for 3 months, you receive what's called lis pendens, which is the first stage of foreclosure. At that point in time, you need to think about, what are you going to do? Are you going to attempt to sell your home? And that may be challenging depending upon the type of home you have. Are you going to do a short sale, which implies that you owe more money than your home is worth at that particular point in time? Or are you going to do a deed in lieu of foreclosure, which means that you basically hand over your deed to the lender and walk away? Or do you simply stay in the home until it's foreclosed and you get evicted? I mean, realistically, that's the last option. Now, if you do nothing, you continue through the foreclosure process. There's eventually a sheriff's sale. Depending upon which state you're in, it's an immediate foreclosure or there's kind of a delay in the foreclosure for a few months, the property becomes either bank owned or privately owned, typically by an investor. That is what it looks like.
Well, Pam, that's a pretty grim picture you paint. But the FHA, or Federally Financed Homeowners Agency, did extend the moratorium on foreclosures for federally financed single-family home mortgages until the end of this month. But that doesn't cover commercial banks. So what are you seeing with regard to mortgages held by commercial banks, and do state moratoriums impact those mortgages?
So let's talk about who can issue what. You have commercial banks and you have mortgage bankers, both of which can issue federally backed loans. Okay. The difference is, and federally backed loans are FHA, VA, USDA, Fannie Mae, and Freddie Mac. Okay. All of those are covered under the CARES Act. And what that means is that you can request 180 days of forbearance on your loan, meaning for 180 days, you do not have to pay your loan. The interest accrues as it normally would. You also do not have to submit any extraordinary paperwork. So for example, if you did a short sale, there's a slew of paperwork that you have to submit in order to do that. Under the CARES Act, you simply have to make the request. Now, I don't know what goes on in the background with that, but that's what the act says. You can also ask for a 180-day extension on that. So basically, you get roughly a year of forbearance. That only applies to loans that are federally backed. So the first thing that you need to do is to find out the type of loan that you have. And we're going to have some links on the website that will allow you to go in and figure out what your loan is. The other thing that you need to do is to identify who your servicer is. You may have gone and gotten your loan from Bank A, but the reality is by the day after you close, that loan could be owned by someone else. So you need to figure out who your servicer is. Once you have the information about the type of loan that you have and who your servicer is, you will try your best to contact them. There are phone numbers that are on your mortgage statement. There are some other links that will give you to Fannie Mae, Freddie Mac, FHA, etc. You can also try those routes as well. Okay. If you have a privately financed loan, not any of those government-backed loans, you must immediately reach out to your lender and try to figure out if you can work out some sort of deal with them. I can't tell you that there's no standard here. Each lender has their own set of rules, guidelines, etc. Now, if you do have a government-backed loan, what are your options? One is, if you can continue to pay your loan, pay your loan, if you can do that. You have to contact your lender, and as I mentioned, you have this 180 days of potential forbearance, but you need to negotiate with your lender about what you can do. Maybe it's 180 days of forbearance. Maybe you can pay part of your loan every month. Whatever the conditions happen to be, you can negotiate. It's not a matter of just accepting what you're given. Okay. But the other thing that you need to think about is, what are you doing when you come out of forbearance? If you do take forbearance, right? How are you going to make up the lost payments? Now, originally there was a thought that you were going to have to pay back everything as soon as you came out of forbearance. For the federally backed loans, that is not true. Okay. So that's another point of negotiation. Are you going to pay a little bit more every month on your loan? Or is the past due amount going to be tagged onto the back end of your loan? Is your loan going to be extended maybe to 40 years instead of 30 years? These are all the different types of options that would be available to you. But the most important thing that you need to do is to get on the phone and negotiate some terms that work for you.
So Pamela, in our conversations between us before the recording, you mentioned you've been thinking about some things that Black homeowners can do to protect themselves and some ideas you had for progress on this issue in the future. So can you share those with us now?
Well, what I'm going to suggest is something that I don't think that exists. Okay. In today's world, when a person buys a home, the lender makes sure that they take out insurance to protect the lender against default. So you have to pay insurance in advance, and you're paying monthly insurance for the life of the loan. And I'm talking about the federally funded loans. So as long as you have that loan, every month you're going to be paying mortgage insurance. You can take out life insurance to ensure the fact that if you die, money's going to someone. What you don't have is insurance that protects you against losing a job or having an illness, and that would continue to pay your mortgage. Now, I know a while ago when I was working with some bankers from Wells Fargo, they had a program that would allow you to basically buy in and protect your mortgage payments for a certain number of months. I don't remember the cost of it, but the reality is that most people cannot obtain a Wells Fargo mortgage. That's just the reality. And I don't know if they still offer the program. But it would be a great idea if we could figure out how to work up a program and get the financing that would allow Black homeowners and others to make a small monthly contribution towards an insurance plan that would cover their mortgage for, let's say, up to a year, should they experience unemployment or an illness. At least if that were to happen, they would have that coverage for a year, and realistically, sometimes it takes a year to get back up on your feet again. That's the one thing that I see is missing. We've gone through this phase in 2008 to 2012 where we lost homes and jobs and unemployment was high. Now we're going through the same thing all over again, and we're hitting the same obstacles. People are going to be losing their homes because they simply cannot pay for them. So if something like that were actually to come up, I think it would be a great opportunity to jump on that as a homeowner.
Well, this has all been really informative, and we'd like to thank our guest, Pamela Taylor, broker manager, Jordan Baris Real Living in Livingston, New Jersey, for her expertise and advice during this first episode of Wake Up with Nubian Tigers Talk. Also, we'd like to thank my former classmate from high school in the Boogie Down Bronx, Bob Hunter, for composing the opening and closing theme for our podcast. Be sure to join us on our next episode, where we'll be doing a deeper dive into the institutional practices that inhibit Black home ownership and how advocates are working for reform. Michelle, you've got it.
If you enjoyed today's episode, feel free to leave a comment on the website, NubianTigersPodcast.com, or you can subscribe by clicking the subscribe button and receive notice by email when a new episode comes out. You can also email us at nubit@NubianTigersPodcast.com. Nubit is Nubitt, Nubian Tigers Talk, if you're keeping up. We're on Twitter as well. Our handle is Nubian Tigers, written as one word. Looking forward to sharing the next episode with you.
Wake up, wake up, wake up.